Something happened in February that I haven't seen across all submarkets all at the same time. And I think most people missed it. The headline number says balanced market, a 12.6% sales to active ratio across Metro Vancouver. But that number isn't the whole story. The story is actually underneath that. When you look at what actually happened in February, not the headline, not the narrative, just the raw numbers, something interesting is definitely going on. Today, I'm going to walk you through exactly what the data says, not what I think is coming, not predictions, just what February actually showed us. And one question it raises that I think is worth paying attention to heading into spring. Let's start with the Metro Vancouver picture. 1,648 sales in February across the region, down 9.8% from last February, sitting at 28.7% below the 10-year seasonal average. Total active listings sitting at 13,545. That's 37% above the 10-year seasonal average. On the surface, more supply, slower sales, prices soften year over year. The GVR's chief economist, Andrew Leese, called it clearly. The pace of sales running well below long-term averages is no longer a surprise. His exact words, it's become the new norm. Now here's where it gets interesting. New listings across the regions actually dropped 6.4% compared to last February. And the drop wasn't driven almost entirely by condos. New condo listings were down only about 7% year over year. So while total inventory is still elevated, fresh supply coming into the market is contracting, less new product entering, and yet homes are selling faster. That combination is what I want to unpack today because it tells a more specific story than the headline number does. Here's the number that stopped me when I looked at the February data. Days on market, not in one submarket, across all of them simultaneously. Downtown, 39 days in January, 16 days in February. That's a 59% drop in a single month. Vancouver West attached, 48 days in January, 16 days in February. That's a 67% drop. Vancouver East attached, 22 days in January, 13 days in February. 41% drop. North Vancouver attached, 26 days in January, 15 days in February. That's again 42% drop. West Vancouver detached, 68 days in January, 33 days in February. That's a 51% drop. Every single submarket I tracked moved faster in February than it did in January. Not one or two of them, all of them. Now, part of this is seasonal, no question. February always moves faster than January. But the scale of the drop across every submarket at the same time is definitely worth noting because it means the listings that are on the market right now are moving. The question is why? And what does that mean for spring? Here's the question I keep coming back to. New listings are contracting. Days on market are collapsing. Total inventory is still elevated, but it's not growing the way it was. So what's happening on the seller side? One possibility is that sellers who were going to list have pulled back. Maybe they're watching the market. Maybe they're waiting for better conditions before they actually commit. And if that's true, if supply is being withheld intentionally, then the inventory overhang that's been pressuring prices may not grow further. And a market where supply stops growing while demand stays steady tends to find a floor. Now, I want to be clear. 1 month of data does not confirm that. This is only a signal worth watching, not a conclusion. But the data raises the question, and spring is going to answer it. If new listings flood back in April and May the way that they typically do, the pressure on prices continues. If sellers stay cautious and supply stays tight, we may be looking at the beginning of stabilization. Watch the new listings number in March and April reports. That's the number that will tell us which story this is. Now let's get into the neighborhoods because the submarket breakdown is where the real picture lives. Downtown attached overall 13% sales ratio. Balanced on paper, but the price band breakdown tells a completely different story. The 500,000 to 800,000 range, downtown is running at 22%. That's a seller's market. Buyers in that range are competing. Above 1.25 million, the market is essentially frozen. Above 1.5 million, 2% sales ratio, 116 sales total downtown in February, up 61% from January's 72 sales, and days on market dropped from 39 to 16. The market is moving, but only where prices make sense. And in Cole Harbour specifically, 117 listings, 6 sales, 5% sales ratio. One of the most prestigious addresses in the city, one of the weakest absorption rates downtown. If you own in Cole Harbour right now, the data is telling you something clear about where your price needs to be. If you're buying there, you have more room to negotiate than anywhere else downtown. One more downtown number worth noting: 3-bedroom condos, 92 listings, 2 sales, 2% sales ratio. The larger format downtown product is not moving. The sweet spot is 1 and 2 bedrooms at the right price point, and that's where the activity is concentrated. Now we head over to Westside attached. 14% overall, balanced, but Fairview is at 25%, Point Grey at 40%, Oak Ridge sitting at 2%, Marpole 6%. Same city, same data set, completely different realities depending on which pocket you live in. Sales up 49% month over month. 74 in January, 110 in February. Days on market dropped from 48 to 16. The Westside attached market woke up in February, but it woke up selectively. Location and price are still doing all the work. On the detached side, Westside is a buyer's market at 9%. Sales nearly doubled month over month. Kitsilano at 31% is the standout. If you're selling a detached in Kits right now, you're in the strongest pocket on the west side. Now looking at Vancouver East attached, this is one that stands out most clearly in the February data. 21% sales ratio. This is a seller's market. The only true seller's market for condos anywhere in Metro Vancouver right now. Sales doubled month over month. 63 in January, 126 in February. Mount Pleasant at 37%. Victoria at 38%. Knight at 40%. And Fraser at 31%. While downtown is navigating a split market and the west side is selectively active, East Van condos are moving across multiple neighborhoods simultaneously. Days on market dropped from 22 to 13. East Van attached is the strongest submarket in the city right now. And on the detached side, East Van is a buyer's market at 10%. But pockets with development potential and rezoning activity are seeing consistent demand that broad numbers just don't fully capture. The North Shore, worth noting, North Vancouver attached sitting right now at the balanced market line of 20%, which I would consider seller's market territory. The 700 to 800,000 price band specifically is running at 34%, a seller's market with a balanced overall picture. Lonsdale, Lower Lonsdale specifically, is at 23%. Mosquito Creek at 36%. Days on market dropped from 26 to 15. North Vancouver is holding steadier than most people expect. West Vancouver detached, totally different story. 6% sales ratio. Deep buyer's market. Prices are down significantly year over year. Days on market dropped from 68 to 33. Still the longest in the region by far. If you've been watching the West Vancouver market, the negotiating room is real. Richmond attached, buyer's market at 10%, 1,186 active listings. Benchmark price down 4% to 655,000. Price per square foot down 5%. Richmond has supply. Buyers there, they know this and they are negotiating accordingly. So here's what February actually tells us. The headline says balanced market. The data says something more specific. Every submarket is moving faster than it was a month ago. New supply entering the market is contracting. East Van condos are in a genuine seller's market. Downtown is split clean, down the middle by price band. The west side is active but selective, and a question forming about whether supply is being withheld and whether that's the beginning of a price stabilization or just a pause before more listings come in spring. We just don't have the answers yet, but we'll have a much clearer picture when the March numbers come out, and I'll walk through them the same way when they do. I want to hear from you. Are you seeing what the data is showing in your neighborhood, or does something feel different on the ground where you are? Drop it in the comments, because the street level view matters as much as the numbers, and maybe more. If you want to talk through what any of this means for your specific situation, buying, selling, or figuring out your next move, the link to book a call is in the description. As always, no pitch, just a straight conversation about where you actually stand. And if this kind of breakdown was useful to you, don't forget to like and subscribe, and you'll get the March update when it drops. Thanks for watching, and we'll see you in the next one.